What is up, guys? I'm back here again with another one. In this video, I'll be sharing a nice strategy that I use to take advantage of momentum when it comes to trading synthetic indices. Sit back, relax, and enjoy. Please note, any information herein is not intended, nor does it constitute financial, tax, legal, investment, or any other advice. Okay, so when we look at momentum, we always still have to know the overall direction of the market, okay? And obviously, the overall direction of the market we obtain from the higher time frames. I've always told you guys that we do top-down analysis all the time. And for you to conduct a proper top-down analysis, your analysis has to emanate from the highest time frame possible, which is the monthly time frame, because this will give you the organic, or should I say, the real movement of the market. Okay. So now, if we're to conduct a top-down analysis on the volatility 100, you realize that while on this monthly time frame, what has happened is price came and failed to break this low. And now that it has failed to break that low, we're buying from there. Okay. And so the momentum is to the upside. So now, remember now, a month has 30 days. And when you see this type of momentum, it means that, we're really pushing to the upside. And this is not a market you really want to sell in, all right? And you're already getting this information from the higher time frame. So failure to start from these higher time frames can easily put you in trouble, because if you go to the lower time frames like the H1, you might see opportunities to sell, right? And now people that trade from these higher time frames know that whatever H1 sell opportunity there is very temporary, simply because of what's happening on these big guns, which is the higher time frame. And so now on the monthly, there's clear rejection of these lows. I always tell you guys, you can quickly go to the line graph so that you see on the line graph, this is the low that price failed to break below, as you can see right here. It failed to close below that, and we've been pushing up. And of course, it will be in our best interest to ride this momentum to the upside. So, there's no harm in shading that monthly candle, and we're going to scale down, right? We're doing a top-down analysis. Now, obviously, on the weekly time frame, that top-down analysis is more clear, right? This is the order block we're rejecting from. And, what we really care about is the fact that for these past 1, 2, 3, 4, 5 weeks, the market has been pushing up, right? This is the relevant data, right in front of you, okay? To say that we're pushing up for the past 5 weeks. So if for the past 5 weeks we've been going up, and as a trader, you want to either trade today, tomorrow, or sometime this week, or even next week, you're not going to be looking for sell positions, because whatever you do there, if you sell, is you're going against this, right? So you really need logic in your thinking, and you really need to not fight what's already there and rather join this. And that is an upward movement. Now, of course, because we are buy biased, right? For the purposes of this momentum strategy, you want to use a buying momentum, okay, while utilizing the momentum from the higher time frame. So we understand that market that is pushing up will always exude higher highs, higher lows market structure, right? And at the most recent low is preferably where we would want to take a trade. So it's important for us to see how the market behaves at this most recent low. So if it fails to break this low, and for instance, it's now on its way up, because of this failure to break this low, we can always estimate that the market is actually going to approach that high. And this is what I want to talk to you guys about today. If you see those opportunities, for instance, on the daily time frame, I want to discuss with you how you can then scale down and utilize that in a clever way as well, because it's a little bit of a jungle out there, and if you don't know where you put your stop loss, it's really going to get fetched, right? And so this is the purposes of this session, right? So we want to deal with this, and we're going to scale down. Let's head over to the daily time frame, and I want you guys to notice something in terms of market structure. This is a buying market structure, but it's obviously not as pretty as we draw it, right? Remember, we said that we have higher highs and higher lows, but it's not going to be a textbook exercise where everything is as perfect. If that was the case, we'd all be billionaires. So you need to be really principled and understand what's happening. And I want you guys to pay particular attention to these lows over here. This was a straight low, okay? And price actually failed to close below what I would say is this area here, right? And we started pushing up. This is on the daily time frame. So I just have a question for you. When we saw this momentum, right? And this momentum, and this momentum, clearly we are approaching these highs. So you must understand that your entries are actually within these daily candles here. I'm going to shade them for you so that you see. Within this, there's actually entry opportunities, right? And you get those entry opportunities on the lower time frame. So what are the prerequisites for you to enter? The fact that we are respecting market structure while going to the upside. There's no harm. Nicely draw what you need to draw, okay? Put in your channel there, all right? Say to yourself, we have the bottom of the channel, okay? We also have the top of the channel, okay? We have come to the bottom of the channel, right? So obviously this channel is only valid because we have one touch, two touch, and on the third touch, we are pushing up. You see this momentum. That's what you care about. That's what excites you, right? And you also see that it's this low or this area that price is failing to go below. And you want to utilize this momentum, but you have your targets. You don't want to be overly ambitious, although on the weekly time frame, we are well aware that guess what? This is going to push for a very long time. V100 is buying for some time. If anything, we're going to be looking for buy opportunities on this. While on those higher time frames, it's okay to put your traffic lights in. I can use this red line over here while on the weekly time frame to say that for the long-term buy purposes, I would want to not buy when the market gets to somewhere there, right? Because clearly you can see there was supply in the past there, supply in the past there, supply in the past. So it is possible the market could approach there, retrace a bit, then continue. But now, because it's the weekly time frame, this retracement could be days of selling that you don't want to involve yourself in. Of course, I still anticipate that even after that little retracement, we will still push up because we have a low here and we have a higher low there. And so obviously this is the organic movement that we're expecting. So back to the business of the day, we have that daily situation, right? Everything, right? Look, so remember when we enter a trade, we would preferably want the trade to run in our direction for a long period of time. And if we are being guided by the higher time frames to say that we have this buying momentum coming from the daily time frame, we are rest assured that if we enter a sell on the lower time frame, if we enter a buy position on the lower time frame, we could experience drawdown, blah, 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 but the market should still continue. And that's what I want to talk to you guys about this, your entries within this. How are you going to enter? Where's your target? You're entering obviously anyway before the market actually gets to these highs, right? So this is your room for entries. It's 2 days of buying, but you need to be smart because on the lower time frames, what you realize is there's retracements there. So now let's head over. I want to nicely shade it. These are the parameters for our entry. I want to shade it because then that is going to inform us, right? How the movement actually occurred, right? Okay, so let's just go back here. So I want to shade the most relevant thing until this high here. So I want to put this red line here. And as you can see, literally, you have to be very observant. Can you see when we got to that, we retraced? It's just not visible because it's the daily time frame. I'm telling you, this retracement here shown by this rejection is hours of selling. That if you're in there and you don't know where you've put your stop loss, that's you gone. Okay. So these are those tips I'm trying to share with you guys that you really need to be observant when it comes to this. But anyways, this is your trading room, right? From here to up until there, you get out at the most recent high. Of course, because of the market structure, we were obviously going to print a higher high, which is what is happening right now. You really don't want to hold for another 8 hours while being retraced when you've made whatever your profits. You can get out of that. Okay. So in essence, what am I saying? Let's go look for those entries on the lower time frames. We can start on the M30. We will scale down to the M15. We just want to see how the market conducted itself before it got to our red line. Okay, so here's the movement. And from the daily time frame, we're going up. So here's the trick. Wherever you enter, right, before we get to our speculated TP area, you need to understand that you can have a stop loss for as long as that stop loss will be either less or equal to the amount that you're speculating till the TP area. All right. So what do I mean? I think I entered this. You guys would just need to go check my Instagram stuff. I post this, right? I entered somewhere, I think around here. The market was somewhere here, and I had drawdown. Okay, a lot of drawdown. but my stop loss placement was, I think, somewhere around here. So I think I entered here and my stop loss was somewhere around here. Okay, it's quite a big stop loss, but for this strategy, I want to really advise you, there's no need to be greedy when you can be consistent, right? You guys want to have tight stops, I mean, go for it. It's allowed, but we also care about the consistency of what you're doing. What's the possibility that you're going to get stopped out when you can easily just make a return on the investment? So I placed my entry and I hit my stop loss far off because I'm saying to myself, my TP region speculated, okay, let me use another color, is all the way here. So with my account size, if I put my stop loss here, maybe it's a $200 account, whatever the case may be. By the time the market gets there, it'll be on $400. Now I just have to wait. It's a boring experience because, look, you get in, you see that, but you don't panic. The reason why you don't panic is you're guided by the organicness from the higher time frames. Okay. And you also, right, so essentially with this daily candle strategy, obviously you want to use that daily market structure momentum. So clearly, because we have these lows and we have a higher low and we have a clear rejection from these lows, I was riding this momentum all the way up. So if the daily is giving us that, we need to look for an entry on the lower time frames, and that's exactly what I did. So now just on the M15, I entered this trade, I think yesterday. I entered somewhere around here, and I want you to notice something. Most of you always ask why I put my stop loss so far away, is because I know for a fact that the market likes to trap and to hit stop losses and then continue. So once you have that higher time frame market structure and momentum figured out, you know for a fact that it's going to go in your direction. But to avoid this, right, just ensure that your stop loss is far away. Of course, you should never risk more than you are potentially able to win. So my stops were somewhere around here and holding the trade right now. So just to check the account, this is a $230 account. We're actually up and we're already on 434 and our TPs are somewhere around here. With regards to the TPs though, one can say that because the market structure from the higher time frames is such that we have a high here, we can even expect a higher high there. All right, so that's basically the essence of this trade.